It started with a single tweet earlier today from Elon Musk's personal Twitter account, initially treated by many as a joke since it seemed to make a reference to cannabis, and was then followed with a short tweet that could have easily been sent by someone high on weed. It didn't take long to realize that the tweet was real, and was quite possibly one of the biggest Tesla news stories of this year. "Am considering taking Tesla private at $420. Funding secured," the tweet said, followed 10 minutes or so later by the tweet, "Good morning," with a smiley face. Sent at 10 minutes to 1 in the afternoon East Coast time, the tweet was soon picked up and led to Tesla's share price fluctuating wildly, leading to a temporary halt on Tesla trades on the NASDAQ stock exchange. Then, when trading was restarted on Tesla stock just 15 minutes before the closing bell, Tesla shares rapidly peaked at more than $381 per share, nearly $40 higher than it was at the start of trading this morning. The reason? Tesla is ready and willing to transition from a publicly traded company to a privately owned one. Moreover, Elon Musk says that he has a buyer, and while he hopes Tesla's current shareholders will opt to transition their public shareholding into a private one, the buyer will pay those who wish to sell their shares a price of $420 per share. But what's meant by going private? Where did it come from? And what will it mean for Tesla moving forwards? Going private is essentially the opposite of a company becoming publicly traded. Rather than offer shares or stocks of the company to be traded on the stock market, the company is owned by a number of private shareholders. Instead of being able to buy stocks and shares whenever they want, those willing to invest in the company by buying shares may be given the chance by the company on a semi-annual or occasional basis. Like a publicly traded company, privately held companies can offer their employees share options as part of their compensation package, but again, those share options can only be privately exercised at specific points. Importantly too, privately held companies do not have to publicly report their financial statements the same as publicly traded companies do. This means that a privately held company can keep a tighter rein on who knows what about the company, something which can give them a competitive advantage. And since there's no requirement for quarterly earnings reports, the company often gets to make decisions that look further into the future than the next shareholder letter. On the flip side, a privately held company can't use the stock market to help it raise money, as publicly traded companies can, by offering additional stock or carrying out stock splits. This doesn't mean privately traded companies can't earn money through share sales. They can, but who can buy them and how much they pay is set by the company, not the market. Transitions from public to private aren't as rare as you might think. Dell is probably one of the most famous ones, turning from a publicly traded company with financial issues to what its founder called the world's largest startup. That statement, while a little tongue-in-cheek, allowed Dell to refocus its efforts on its products, not its shareholders, and these days the company is a lot healthier because of the switch. In an email sent to employees today, Tesla CEO Elon Musk set out his own rationale for wanting to take Tesla off the stock market and make it a private company again. Many of the reasons tie in with those I've just stated. Additionally, plagued by the quarterly earnings push and traders betting against Tesla in order to try and short stocks, Musk said he wanted the company to remove as much distraction and short-term thinking as possible, allowing it to do what's right for the future of the company rather than Wall Street. Following a similar structuring to Musk's other company, SpaceX, Tesla is hoping that it can set up a system that allows Tesla employees to remain shareholders of the company, just as SpaceX employees are shareholders of SpaceX. This would enable employees to periodically sell their shares and exercise their share options while rewarding employees with a future, growing stake in the company. In the same way, Musk says that he hopes current shareholders will continue to invest in the company, converting their current public shares into privately held ones through a special purpose investment fund. For those wishing to sell their public shares instead of convert them to a privately held stake in that special purpose investment fund, Musk says he has an investor willing to pay $420 per share, a figure which, while yes, happens to be coincidental to the $420 consumption of weed, also happens to be about 20% increase on Tesla's stock price following its Q2 earnings call. Musk's letter also makes it clear that he has no plans to leave the company, adding that the switch to private ownership is not about gaining additional power at the company. Instead, Musk noted that he currently owns about 20% of the company, so does not envisage that changing after the deal has happened. What's next? Well, the proposal has to be approved by a majority vote Tesla shareholders, who will need to support it in order for it to go ahead. As for that mystery buyer who has the extra money ready and willing, Musk hasn't said who it is, but at a potential price of $74 billion, it needs to be someone with a lot of money. As a side, it won't be that much though, because most shareholders will likely transition their shares over, then sell them. One potential source for all that extra money, the Saudi Arabia Sovereign Wealth Fund, known as the Saudi Arabian Public Investment Fund, or PIF, which also announced this morning that it's acquired approximately $2 billion of Tesla stock. That news, which broke a few hours before Musk's first tweet about privatization, caused Tesla stock to rise from its starting price today of around $341 per share by about $20 per share. This fund, mainly built through the proceeds of the oil industry, is currently believed to have assets of more than $2 trillion. Tesla's $74 billion share purchase price would be a drop in the ocean to it. Note again, I'm not saying that that's the source of potential buyers for those who want to sell their stock. It just seems like an appropriate fit. And because some people have already asked, would any financial investment from Saudi Arabia risk Tesla in the long term because of the country's connection with the oil industry? No. Not at all. With so much money to invest, the PIF has been investing a lot of money of late into renewable energy projects and future transportation projects, because it knows just as much as everyone else that the days of oil are numbered. What do you make of the news? Do you think it will be a good or a bad thing for Tesla? And if you have shares, will you be keeping yours or selling them? Let me know in the comments below. That's it. As always, hit the notification bell to hear the moment a new show is uploaded. Subscribe to both of our channels, and if you would like to see us grow, please support us by using one of the two links above or by buying something from our shop. Thanks for watching, and as always, keep evolving.